Hello and good morning, folks. We are set with another domestic update, this time from our central bank. RBI released their MPC minutes, which were quite surprising as it has some hawkish tone to it. I'm Shikhar Garg, bringing you the Almus Market Mornings. Coming back to the minutes, Mr. Das mentioned the persistent core inflation near the upper band as a concern, along with the growth slippage being another one. A few key things that were common among all the MPC members were the concern of the growth. While we also mentioned that the real impact of the front loaded policy action is yet to be felt by the economy. With all such updates, we actually have some thoughts, and we wonder about what sort of a economic or world will Turkey be with the 1 month deposit rates being higher than the commercial borrowing rates. I mean, with inflation peaking around 85%, what exactly is going on out there is also a surprise for us. So, JK, what do you think? What's your take on domestic markets as well as the global markets?
Good morning, Shikhar. Uh, actually, reflecting the relaxed mood of the traders in one of the chat rooms I follow regularly, there was more discussion on various brands of spirits than on currencies and bond yields. It seems like everyone was relieved that one of the toughest and volatile year is nearing its end and would like to drown it in parties and not worry about what lies ahead. But as analysts, we can never sleep without looking at the last bit of data and the market moves, and it is in our DNA. US economic data continues to be mixed, and the underlying weakness continues. While moderating inflation has not led to Fed softening its stance, it has certainly boosted consumer confidence, as per the conference board data yesterday, and that has come at its highest reading since April versus what was in November. Economists also polled a much lower confidence number, and that is one positive. But however, the existing home sales, was poor, adding to the woes of the housing market. Also, this followed the German consumer sentiment data, which improved further as government relief measures were taking a bite out of the soaring energy prices. Now, Santa is trying his best not to disappoint the investors. Risk assets have got a lift yesterday after depressing 5 days of trading, and improved consumer confidence, better corporate news, and a soft number on inflation, this time from Canada. Global composite index of stocks rose 1.3%, and all three major indices in the US were strong. Performance of the risk assets going forward will, however, depend on how companies cope up with high input costs and elevated financing conditions. Market will await Q4 results, which will start rolling out by the first week of January. Yields were slightly softer in the US, led by buying in the short tenors, possibly more investor buying into safe assets with thinner conditions awaited. We are not surprised as the short-term rates look attractive related to volatile risk assets, and also the PC core inflation data tomorrow is expected to show some softness. Interestingly, for the same reason, the yield curve has further flattened yesterday, with the reading now at minus 56 versus minus 91 at its steepest level. The dollar firmed Wednesday, recovering a small portion of the previous session's losses as the market reaction to BOJ's bond market adjustment faded, and year-end forces began to exert some influence. Yen strength is not going to fade away in a hurry, in my view, as the sudden policy move from BOJ has left many carry positions in the lurch, and speculation is rife that it's only the beginning. Euro continues to get support from higher yields and economic data that is surprisingly strong, but GBP are relatively softer, particularly after yesterday's public sector borrowing data rekindled worries about the fiscal. Coming to rupee, the decoupling from other currency moves and traditional factors of influence has continued, and the bias is still to the upside for the dollar. In the short term, while it is bereft of much volatility against the USD, profit taking on Euro INR and GBP INR has kept it range bound. However, without a surge in supplies, we are unlikely to see much strength returning to the rupee. Just to note that if the spot USD INR closes the year at current levels of 82.85, it will be the weakest performance on a year-on-year basis by the rupee after 2013. yesterday we also had the minutes of latest RBI MPC committee meeting, and the minutes were very clear that premature pause is not required, even as core inflation remains sticky, and indicated that CPI inflation target remains at 4%. RBI members were open to further rate hikes to break core inflation, whereas Ashima Goel, one of the members, is against further rate hikes, that real rates are positive and need to look controlling the CAD. RBI is also not in favor of giving more specific forward guidance on the monetary policy in view of the various uncertainties that is besetting it. That's it. Thank you. One more day to go for Christmas, and have a good time. Thank you.
Okay, JK, that was quite good. And yes, folks, as the RBI MPC members mentioned, the need for premature pausing is not required as the core inflation continues to be sticky. But I really find the fact that there's even bigger need to control CAD, which Ms. Ashima Goel mentioned. So, folks, we can have some actions out there as well. While, as JK mentioned, yen strength is not expected to fade away anytime soon. But if we have to talk about strength, INR has not shown much. Rather, we have the weakest performance on year basis for INR in so many years. So that's an interesting way to observe the currency. But all said and done, as JK mentioned, the brand of spirits can be the thing to follow as the or as against the spirit of concerns on the economic growth. So, folks, pick up your brands and let's see how the holiday season goes ahead with all those drowning in the spirits. Thank you so much for joining in, and we shall come back again with another Christmassy update tomorrow. Thank you.